It has been a wild time for crude oil. The price for a barrel of crude went from a 4-year high earlier this fall to historic lows, and as of today, a slight uptick in price. Week over week, oil has seen its first continuous drop in the price since the 2008 financial crisis. When will the oil losing trend come to an end? Well, I got answers from Mount Holyoke College politics professor Vincent Ferraro and Carrie Lefort, international business professor at American International College.
Well, it's not going to end anytime soon. I think we're talking about a secular decline in the price of oil. I think the precipitous drop that we've seen over the last 6 weeks is due to the fact that the market had been anticipating the Iranian sanctions, and then the Trump administration gave waivers to 8 countries, which account for 80% of Iranian exports. So we've got this very, very large 2 million barrels a day surplus that has to go away. But I think over the long run, we're talking about slowing economic growth, a rising value of the U.S. dollar, and a whole bunch of other factors that are going to make the price of oil stay low.
Professor Lefort, what do you think?
I think it might start turning the first of the year. There's a couple of dynamics going on. First of all, OPEC has its meeting in December. They're already saying that they're going to cut back anywhere close to 1 million to 1.5 million barrels per day. Oil has been really getting very, very low. U.S. shale is most productive when oil prices are high. They say when you start getting to $50, $55 a barrel, it gets to the point where it's not as profitable. So we might see a slowdown in U.S. Shale production, as well. So I think those type of factors. I think another important factor is at the end of the month, the U.S. President Trump is going to talk to President Xi in China after the G20 about what we could do about the trade war, and hopefully there's some resolution there that'll have a positive impact as far as the Chinese economy goes. If they can start increasing their demand, that again will impact on this oversupply that we have.
If we look back at 2008, we really could pinpoint one big challenge at that point, which was the financial crisis, which was the main driving factor behind the drop that we saw then, right? Is it as simple as pointing to one thing now?
Not this time. I don't think you can talk about a single factor. I mean, we have some interesting dynamics that are going on right now. I think the Russians are playing a real spoiler role because they want the price of oil, their oil, to be pretty low because they're afraid that the Americans are going to take the European market away from them. And that's not an economic issue for them. That's a strategic issue. They want to be able to have that leverage over the Europeans. So the Russians are going to keep pushing the price lower and lower in order to preclude an American expansion into the European market.
Do you see things the same way?
I guess I would see 4 factors that's influencing the bear market that we're experiencing. The first has to do in the June timeframe when OPEC, after its meeting, recognized the fact that the economic sanctions against Iran was going to go into effect in November. They started to increase production. At the same time, because oil prices were actually going up at the time, in October was $85 a barrel, it really was a very, very lucrative market for U.S. shale oil. With the end results in November, we're producing at 11.6 million barrels per day. And I think when you add to that the fact that Trump, when he put the economic sanction in effect against Iran, he gave a waiver to 8 countries. That means there's roughly a 1.3 to 1.5 million barrels per day that we didn't think that we were going to have in the system that is now there. And what makes it worse, because those are all supply issues, that on the demand side does appear to be, a slowing down of world, economies, starting with China.
It's not that long ago that we were talking about the possibility of $100 per barrel of oil prices, and here we are now kind of floating in the mid-50s range. Is that type of shift in a relatively short period of time common?
Well, it's not common, but oil is a very volatile market. I mean, Carrie and I have been talking about the price almost in economic terms, but if you have some sort of political crisis that's going on in the Strait of Hormuz or in the Strait of Malacca, in the South China Sea, I mean, the price can spike. I mean, we can't account for those type of shocks. Oil is always going to be a very volatile market.
Go ahead.
Yeah, I was going to say it's a classic example of supply and demand. And things like the supply shock, demand shocks can, result in major turnarounds in just a matter of weeks, like we are seeing now as far as the bear market goes. Think about what happened to the oil supply back when we had Hurricane Katrina. We saw basically the oil supply here in the United States majorly disrupted. With the end results, gasoline prices went skyrocketing, starting to approach $4 a gallon in some, or more in some parts of the United States. So it can, in fact, happen in a very, very short period of time.
For people who are talking about this more broadly, some say that it's a sign or perhaps of things to come that global demand for energy is then lessening. Is it too soon to tell?
Oh, I don't think that it's been lessening. I think you would see maybe a couple of years ago the demand was maybe 85 million barrels per day. Currently, it's estimated at 100 million barrels per day. In OPEC, the U.S. Energy Information Agency is forecasting that in 2019 that it could approach 119 million. So the world's demand, for fossil fuel is not, in fact, decreasing. It's increasing. And the only viable alternative so far, is oil and natural gas.
But with so much talk about alternative energy, is there any hope for people who are looking for those other sources to come in and play a role here?
Well, the alternative energies are never going to substitute for the transportation infrastructure. And that's really where the growth is occurring. And the growth is occurring in China and India, not so much in the developed countries. So I think that's going to continue. But I think that we are going to see a declining demand for oil over the long run. There's no question in my mind about that.
And when you say long run, put a timestamp to
20,
it.
25 years. Nothing happens in terms of demand that quickly in terms of energy sources. But I think the key thing to think about is the fact that right now we've got two major producers, Venezuela and Iran, that are essentially offline.
Because of sanctions.
Well, not
For
in
Iran.
Venezuela.
Yeah.
I mean, Venezuela is because of turmoil.
Yep.
And they'll slowly but surely come back online as well. So I can't see a rapid increase in demand that would satisfy that increase in supply.
So in the shorter term, where do we go from here?
Well, I think in the short term, you got to rely on fossil fuel sources of energy. In the past, that's always been a problem. It's like in the 1970s, you had to rely on OPEC, which gave them an awful lot of control because they were a cartel. And then going into the 1990s, we found the OPEC countries like Mexico, Canada, Norway, Russia. Now going into the 21st century with the ability to frack oil, and if the price is kept high enough, it will continue to flood the market with a relatively high level of supply that can meet demand. The big question is, as developed countries start increasing their economic growth and have a greater demand, which drives up the price of oil or of fossil fuel, that it'll get so high that the international community will say, we need another alternative because we can't continue to pay these high prices. And that opens the door not only for alternative sources of energy, but even the possibility of nuclear power.
Any final thoughts?
No, I think that Carrie and I disagree a little bit about future demand, but that's really speculative. I see that the global economy is slowing down, and I don't see that changing anytime soon over the next 3 to 5 years. So I don't see a chance for a rapid spike in oil prices.